what is happening globally and how do global investors who allocate across the world think about this. Vikas Pershad, portfolio manager of M&G Investments, joins us right now. And Vikas, I'm guessing, looking at the time, that it's all the way from Singapore. Yes, it is. You're not in US, but in Singapore right now. Thank you so much for joining in. Really appreciate your time. I hope all is well, Vikas.
All great. Always a pleasure to be with you.
All right. No, the pleasure is entirely mine, I must tell you. So, Vikas, how are you thinking of risk assets right now? I mean, the skeptic is arguing that while India fundamentals remain solid, the Israel-Iran conflict means that the undesirable has happened, crude has spiked, geopolitical premium comes into being, and all of that should mean that a fairly valued Indian market should come off. And at the same time, I hear some notable momentum traders, Lawrence Balakov, CLSA, and some others talk about some fairly high levels coming in the Indian markets. I'm just trying to think, how do you as a fundamental investor think about it?
This is something I've been thinking about increasingly, and our whole team has. What I would say is that we highlight the short-term nature of many investors these days, but it seems like the market is trading as it should for those who are focused on the long term. India's fundamentals remain sound. We remain of the view that if people don't have exposure to India, they should have some. If they have some, they should have more. And it's a great market for active management still. But I would say that over the last week or so, the market has been much more resilient than I had thought it would be. We continue to run our positions overweight that are in defense. We've been waiting for more volatility in the airlines and in the hotel operators and the OTAs. We've not seen much yet, but that is an area that we'd be looking to add more to. But overall, if you look at a portfolio, not many changes over the past week and a half. We remain concentrated in largely domestic companies, whether it's high-end real estate, hospitals, diagnostics, auto parts companies. There's a lot to like in India for long-term investors, and we stay involved. Cash is fully deployed, as it has been through the whole year. And this is a good reminder that if you try to time the market, there have been plenty of times over the last 5 years, whether it was COVID or armed conflict breaking out in one part of the world or another, or supply chain disruptions, that you would have missed out on the ensuing rallies after periods of volatility. So we tend to be fully deployed. The portfolios are relatively liquid. If we see big dislocations in some of the sectors that I just mentioned, we'll be able to act. But for now, we like the portfolio and we like India.
Okay. So Vikas, what will make you bearish? I'm just trying to understand, or skeptical. Let's say you'll not be bearish on India because the internals are strong. But what could make you skeptical? What on the global side could make you skeptical?
Well, continuing conflagrations, and if it's not just in Europe and in Western Asia, but if there's something happens in Asia, in Eastern Asia as well. So that's number one. Second, the overall view on India is constructive, it's optimistic, but it's not for every sector and it's not for every company, which is why we are excited to be active managers in this market. You were talking about IT services a little while ago. We are more underweight IT services than we have been at any point in the past 20 years, both by name count and by dollar amount or rupee amount. We are more underweight staples than we have been in a very long time. If you look back to 20 years ago, or even 10 years ago, when I was newer to Asia and to India, and I had many fewer gray hairs than I do now, the positioning was flipped. We were quite overweight IT services, small cap, mid cap, large cap. We were quite overweight staples, again, small cap, mid cap, large cap, and that is flipped. Partly because we're seeing great opportunities elsewhere, but also because the fundamentals have deteriorated. And it's not surprising to me that IT services are trailing again today.
Okay. I think the point well taken. The other question, Vikas, would be therefore that do you make a big deal of all the kind of block deals, etc., that is happening in the country? Because there is a lot of time when this conversation comes up, right? Promoter bech raha hai, or the promoter is selling. So this is a good time to go out and sell. But now we've seen this tape play out in India. At some point of time, if the promoter doesn't sell, there won't be supply for the kind of demand that is coming in on the Indian markets.
The demand has been surprising to me. There's a large block early this week in the retail space, very well absorbed. Yeah. We've seen some IPOs where the demand has been very strong. We passed on some IPOs where we have liked the business, but the valuation has been a stretch. We're not shy about paying optically high multiples because we don't look just at a 1 year forward multiple. We look at what that multiple becomes. However, there has been a series of IPOs in recent weeks where we've passed on the valuation, but they've been very well absorbed, taken up quite well. And so I would say I'm a little bit surprised on that. But again, it comes back to the point that clearly people are looking at the very long term. And the IPO pipeline probably won't match what it was last year. At the end of 24, in the trailing 3-year period, we had more than 700 IPOs in India. We're not going to match that pace, but we're going to see some large IPOs come. We're very actively looking at some. And what's exciting is that they're not all in one sector. It's not like the US where it's largely tech and tech and life sciences. It's a very broad array of companies that are coming public in India, which is representative of where the economy is heading. So we're excited about that. But I've been surprised by the pace and the size of the blocks, and then also by how well they've been absorbed over the past couple of weeks, especially given everything that's going on in the world.
Have you been active? Have you been active in these blocks, Vikas?
Some, not all. We're very selective, and as I mentioned, we are fully deployed on our portfolio, so we have a high hurdle. Being fully deployed enforces discipline, because if we want to buy something, then we have to sell something, and we like our portfolio, so we're not selling very much. One thing I'll add is I'm not surprised by how well Siemens Energy is trading now. We're not involved. It's a space that we've tracked closely. If you start with power demand, and then you look at capex from power grid, and you look at that supply chain, and you look at where that money is going, it's not surprising that investors are excited about this sector. It's a theme that has a very long tail to growth.
Interesting. Okay. Okay, point well noted. Vikas, stay on. I want some more views from you. But there's an interesting study that my colleague Mahima has done. Now it's raining buybacks, we know, right, on Deal Street these days as well. And it's raining blocks. But what are some of the companies on which there are blocks or buybacks worth buying or investing in? What are the companies with the highest amount of buyback in particular? Which sectors are leading? Here's the Profit Research Special. Mahima.
Right. So as you rightly mentioned, there are two ways in which a company, rewards their shareholders. One is dividend or it's buyback. The question really is that should an investor look at the buyback history before investing in that company? Let us find that out. Now, in terms of the past 5 to 6 odd years data, the highest number of buybacks were done in 2022, followed by 23 and 24. But in terms of the highest amount, 2023 saw a buyback of over 48,400 odd crores. So this is the overall view as to how buybacks have fared in the past 5 to 6 odd years. Now, which are these companies where we've seen highest buybacks? In terms of number, highest buybacks in the past 5 years were seen in Ajanta Pharma, eClerx, SIS, Aarti Drugs as well as Atul Limited. But here, in terms of the 5-year returns, highest returns have been given by eClerx, which stand at around 1100 odd %, followed by something like an Ajanta Pharma, which gave return of around 162%. Now, in terms of the amount of buyback, the highest amount of buyback was done by most of these IT companies, where we saw the highest amount was done in TCS in the past 5 years, which was around 51,000 odd crores. The share grew by around 72% in that 5 odd years. Highest return was given by L&T though, which did a buyback of around 10,000 odd crores in 5 years, and that was around 303 odd %. Bajaj Auto also did a buyback which was around 6,500 crore and gave a return of around 218% in the past 5 years. So major names are IT here and followed by one auto name. Now there are some other prominent names also that are known for their buyback history. That includes something like a Balrampur Chini, FDC, NMDC as well as Tanla Platforms, in which Tanla Platforms has done 2 buybacks in the past 5 years amounting to 235 crore, but the return that the company has given is over 895%. The highest amount of buyback in the past 5 years is also done by NMDC, which is around 1,300 odd crores, but the company gave a return of only 150% in the past 5 years. Moving on to now, sectors that are known for their prominent buybacks, that includes your IT, sugar as well as pharma. In terms of what basically are the benefits of buyback, now instead of paying dividends, companies generally use buyback as the other medium to reward their shareholders. Buybacks are generally used to return the excess cash that company has to their investors. The company aims to reduce the overall number of shares available in the market, and because of this, the overall earning per share goes up, and that is how the shareholders are rewarded. In terms of how these buybacks are viable from a tax perspective, of course, reduction in the as I mentioned, outstanding share leads to create a demand in the share of the company, so there will be a huge spike that comes in post the buyback as well in general. Now, whether this is actually viable via tax perspective, well, in the interim budget 2024, before, the government shifted the tax payment provision to the investors rather than the company. Earlier, companies used to pay tax on buyback, but now an investor is supposed to pay the tax on the buyback share, the amount that it receives via buyback, and this is taxable at a slab rate. So this is one consideration that one needs to keep in mind while investing in these companies. Now, whether these IT companies, major IT companies that do majority of these buybacks are something to go ahead and buy right now, well, as per the analyst recommendations that Bloomberg has given, all of these companies are giving returns anywhere between a negative 6% to the highest 10%. Yesterday we also spoke to Sandeep Agrawal, who did say that he sold 80% of his IT portfolio. So one needs to keep in mind before going ahead and investing in these companies that are that have done maximum buybacks in the history. So this is the overall view as to how buybacks have panned out in the past 5 years, and of course something that one needs to keep in mind before investing in these companies.
Okay, so at this time when you have promoters also pairing stake buybacks, obviously giving that sense of confidence. Vikas Pershad still with us. Vikas, great to speak with you. Just your take on the kind of M&A activity we are seeing, buybacks as well as block deals. On the one hand, it's squeezing out liquidity to some extent, but your first take when you see a buyback, does it give you confidence?
It's a timely question, and I want to thank Mahima for doing all that work. I was taking notes while she was talking because there's a lot of good information there. What I'll add is, so 3 quick things. Number one, if you look at 2023 being the biggest year of buybacks in the last 5 years, maybe it's a small sample size, but companies timed it well if you look at it in aggregate. Because if you look at, this was the year after the big short seller report, if you look at the market returns from the end of March 23 to the end of September 24, in those 6 quarters, the market was up 60%. So in aggregate, the companies timed it well. It makes sense that in hindsight, that's when they were buying. But if you look at it sector by sector, coming back to what we were talking about earlier with IT, and Mahima mentioned also, you have to do your work and look at it on a company-specific basis. Just because the IT companies are buying back a lot of shares, just because the pharma companies are buying back a lot of shares, doesn't mean that they're great investments on a company-specific basis. Those are 2 sectors that we had been quite overweight, even as late as a couple of years ago, but we were underweight. I didn't talk about pharma earlier. The last thing I'll mention is buying back shares is very important, but you also have to pay attention to whether these shares are being canceled. A lot of companies buy the shares, they hold them in the treasury, they can be used again, so it doesn't have that same impact on reducing the share count until they actually cancel the shares. So that's something worth paying attention to. But if a company is acquisitive and they see good M&A opportunities, then that makes sense for them to keep that. So those are the few points I'd highlight based on Mahima's work and my first take. Now, on your question about blocks, again, it's very company specific. It is a positive signal, and there are a lot of positive signals and good examples, case studies from Japan. Japan has made a huge effort on corporate governance transformation and capital allocation, and we've seen how well the market has done over the past 5 years, driven by these corporate governance reforms, and it's encouraging to see the same in India. So that was a lot to answer. I'm happy to follow up on any questions that you might have.
Yeah, I mean, and this was pertinent. So, and because we have to admit that in India, relative to maybe the 2000 to 2010 decade, the quantum of corporate governance-led issues, maybe in some smaller fringe names because the number of names have gone up, but the large big-ticket corporate governance issues are probably not as prevalent as used to be the case, right? I mean, there's been some fine cleansing act and rules and regulations being set. Now, because I heard you mention earlier that you are almost 100% fully invested, you spoke about some of the themes as well out there, right, wherein you are constructive. The one interesting name that I heard out there is auto components. Now, autos are not necessarily in the fast lane. So are you choosing component players which have auto plus defense plus other things, or is it pure and auto-driven rationale here?
Well, on the last point, it's interesting. Over the last 6 to 9 months, it's almost like 2000, 2001, when people would add .com to their name. A lot of the companies that we are meeting are saying, well, we have defense exposure too.
Okay, defense.
In this case, the exposure that we have is predominantly auto parts and predominantly exposed to the domestic sector. For now, most of our holdings are concentrated in companies leveraged to 2-wheelers, but they're growing. They're making inroads into 4-wheelers also. Some of these companies do have auto part capacity outside of India, and Europe in particular. And what we've noticed is what was initially a source of concern for us is turning into a positive, because the Indian companies are coming in, they're cleaning up the operations, they're streamlining things, they're lowering costs better than the European owners are doing. the Indian companies are making outbound acquisitions in Europe, which are accretive. They're also making acquisitions in the auto parts space in Japan. The auto parts space in Japan has been hit pretty heavily by a number of factors. Number one being the competition from Chinese companies in the EV space. So there's value there for us as public market investors in that market, but then also for some of our holdings in India. They come to us and say, well, you know Japan well, you've spent a lot of time there. Can you introduce us to XYZ company in the auto parts sector? So I would say that the domestic story is good, especially for two-wheelers when it comes to penetration, but then also content per vehicle. And the outbound M&A story is also interesting. These companies are very disciplined, the companies in India. I mean, they're very careful about acquiring not just for revenues, but acquiring for profits and cash flow also. So it's encouraging. I find that this sector is not in the headlines every day, which lends us to believe that there are more opportunities here.
Because I wonder if you've looked at the defense moves that we're seeing with listed companies. And, I mean, one would say that the downside is that a lot of them are government-owned, free float is limited. But having said that, the kind of shift that we've seen in proof of concept, in excitement around them, is that a story you're buying into right now?
Yes, we remain overweight the defense names in India. When we look at the year-to-date moves in South Korea or in Europe, the Indian companies actually have lagged, despite the very strong performance we've seen, not just year-to-date, but from the January and February lows as well. We have been overweight Indian defense names since 2021. And there have been times where we've been more overweight and less overweight than we are now. And we've taken some profits in recent days. But that's also because we're seeing other opportunities open up. But this defense theme is going to be around for a while. There's comments just this morning from Secretary Hegseth from the US talking about NATO and percentage of global GDP going higher. You have to decide on which company this is pricing this in already. But there's still plenty of opportunities here. On pullbacks, we're inclined to be adding rather than panicking on many of these names, especially the largest ones. And on this point about PSUs, generalizations like PSUs are negative or the government being involved is negative are appealing to us because that means that people are simplifying things beyond what they should. And some of these PSUs in the defense space over the last 3 or 4 years have been some of the best performing stocks in India. And so it's not necessary that a government-owned company is sluggish or is not innovative or cannot keep up or cannot lead the market. You were flashing up some of the defense names earlier, and some of them are the best performing names in the Nifty year to date. We expect that to continue on a long-term horizon.
Okay. Vikas, the other question would be that ahead of this conflict flaring up, there was some serious optimism around one subsector, and which is the oil downstream companies. Almost every note spoke about how inventory losses are done with, and therefore Q1 and Q2 will finally see marketing margin-led gains for all the firms. I mean, there are 3, but they are heavily traded, and which is what I was trying to understand from you. Has that theory been put on hold for the time being, considering that oil has flared up to 75, 78, and the future is uncertain?
The future is always uncertain, which is what makes these things fun.
For the near term.
I know. The previous guest is probably better positioned to quantify the views on the sector. I would say that we're not overweight this space for now because we see other opportunities, but we have added some exposure. We added some exposure here in the sector in Q1. We haven't done much now, but given what's happening in the world, we are paying more attention to it. And I think other investors should as well. It's been an overlooked space for a while.
I'm just wondering, Vikas, and this is, I'm casting the net wide here. What is it that you're finding particularly interesting when you're looking at India right now? An idea or a clutch of ideas that is, worthwhile from a 3 to 5 year perspective?
What we continue to like what we have liked. I think that probably surprises me is that these theses that we were interested in 2021 and 22 and 23 continue to play out. Number one, defense we talked about, but then the second is the K-shaped recovery that we saw coming out of COVID has become a K-shaped economy. People look at the demographics, they look at the pyramid, and they say 1.5 billion people, but only 40 million or so households pay taxes out of 300 plus million. The purchasing power is quite concentrated, and if you look at our portfolio, that is represented through our views in high-end housing, in hospitals, and the pricing power that they have had in airlines in automotive manufacturers more exposed to SUVs than passenger vehicles and sedans. In auto parts leveraged then to those companies. So that is what I would say we continue to find interesting. What we have spent a lot of time on over the last 12 to 18 months is the whole Make in India initiative. There are some areas where we are more constructive now than we were 2 years ago. Defense is one of them. There are other sectors where we are less constructive than we were 12 to 18 months ago. The EMS sector, electronics manufacturing services, our exposure there is close to nil now, and directly in names that are direct pure plays in that space. There's no question in my mind that they will get revenues. The issue then is on margins and on working capital. So we've exited those holdings as of late last year, and we're not inclined to add that back. So again, this is why things are so exciting in India, because you have 6,000 listed companies. My last count, you have 1,600 companies with a market cap over $100 million. Every sector is represented. You have many choices for active managers, and there are opportunities for long-term investors to outperform the market here.
Okay, thank you so much, Vikas. Always a pleasure speaking with you as portfolio manager at M&G Investments. And I think one interesting takeaway was that the calls from 3 years ago do persist. Those stories still seem exciting from an Indian point of view.